Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Eric Wassmann with us. And Eric, it's great to have you. I'm very intrigued about your story from coming to the East Coast to Park City and then back to Colorado. So give us a little summary of how all that came together and how you got into basically the loan business.
So it's a long story, but I'll tell the short version of it. Out of high school, I was a little bit lost, didn't know what to do. So I ended up, someone said, the skiing's great out in Colorado and Utah. And that was what somebody said. I was going to go to Florida. Someone, you can't ski in Florida. So I headed to Colorado, but had some time, ended up in Utah, went to school at Utah State for a while, skied all over Utah. And then a little bit bored in Utah because of the lifestyle. I went back over to Colorado. I had a friend who was at the Aspen Fire Department. So, we did I was able to get a job at the resort. And then I would commute back. I actually lived, I went to Colorado State. And so I lived there on the weekends, just headed for the hills.
Wow.
And then after that, like I said, it was a kind of a recession in the market, ended up with my tail between my legs, had to go back home. And then I ended up at NYU downtown at their graduate school. But the good thing was the graduate school is underattended, so it wasn't that hard to get in.
Nice.
Spent about 6 months on Wall Street and realized after living out in the mountains of Utah and Colorado, I had lost any flair I had for city life and the investment banking life, just wasn't, or stockbroker's life. So I literally got back. A friend of mine called me from Southern California who was in the development business, and I just packed up and came back out to Southern California.
Wow.
Yeah,
So did you go up skiing in the East Coast?
So little places, again, we don't have the variety, but I did ski. We had a lake in Westchester, Dutchess County. They had like this one hill called, Big Birch. Okay, and all of us kids went over there. That's where we learned to ski. You skied on ice. And then little by little, we would go up to, Vermont and New Hampshire, Mount Snow. And we had, and even Massachusetts had great skiing, Okemo and places like that. So, a bunch of us kids. And so we were kind of like, we were the pioneers. I got to ski in a Warren Miller movie, knew the Warren Miller group. But everybody, it was communal back then. Everybody knew everybody. Nicest people in the world. When they say ski bums, I think I was probably the poorest and I had a job. Most of them had nice trust funds that they were living off of and they skied all the time and they just, were looking for something to do.
Yeah. No, that's great. So I've always said, growing up in Colorado, the East Coast skiers are always usually better because they know how to ski on ice versus the soft snow in Utah and Colorado is so much easier to ski on. But at any rate, what can you do? So you get out of you get to the West Coast and then you start into the mortgage business. What happened there?
No, I got a good job in the title insurance business, because it fit me. I'm a boater too. So, in the title insurance business, you basically go to the residential commercial real estate brokers and convince them to use you for their, title business, resales or refis, whatever it may be. And it was a very fun job and a PR job, but I just felt like I wasn't growing in it. It seemed like you could get old shaking hands and smiling and things like that. And, your income was kind of limited, even though what I didn't realize, some title reps are making very good money. But it just seemed to me that I needed to get into something that was more of my financial background that I wanted to get into. It might have been a mistake because it's probably a curse. But I found out about mortgage brokering and mortgage banking and from some guys down in Orange County. And, it looked good to me. So I jumped into it. And the nice thing about it was low barrier of entry. You're a broker, you're just a middleman. So, if you know how to hustle, go out and talk to people, find people, the mortgage business is one of the kind you learn on the fly. Nobody really teaches you. So you make 10,000 mistakes, whether it's residential, commercial loans, you make 10,000 mistakes as your learning curve. And then eventually it all just fits.
Yeah. And it all comes together. Then you kind of got into the whole Silicon Valley, the making applications online and so forth.
Yeah, I was lucky enough because, again, I thought I was going into a more sophisticated business and I found myself literally going kitchen table to kitchen table back then, doing loan applications. And don't get me wrong, it was fun, but it wears you out.
Yeah.
And I was sitting in my car one day, and there was a company, I don't know if you remember, Tech Funding, the guy that had
Wow.
those ads, when the banks compete, you win. And
Oh, wow.
he was just killing it advertising. And I says, there's got to be a better way to do loan applications. And so I made it a point to put together a loan origination software, which was the time actually in San Jose, Calyx Point. There was a wireless company called Metricom, and Countrywide, another lender let me use their um, Fannie Mae, Freddie Mac loan origination systems log on for approvals, and I was just able to package it up. And so online back in 1999 on a wireless, internet connection in my car, I was taking loan applications. Now it was a little bit scary, but Silicon Valley people who had signed up for Netscape and America Online, there was no
Right.
content, right? There was very little content, maybe some magazine articles, you read something in a while. So these Silicon Valley people, they said, I can actually do an application online, and they would just jump online, they would fax me all their documents, and on the back end, I still had to do it the old fashioned way. But, literally as a single loan originator, I was able to do 50, 60 loans a month by myself.
Wow.
I'd advertise in one newspaper, the San Jose Merc, and then the Chronicle, but I would probably get, 150 calls, 200 calls a month. And from that, you could eke out a pretty good living and never have to go to anybody's, table.
Wow. So it was much faster, much quicker, and off you went from there. So then what happened? What happened after that?
Well, like everybody else, I mean, I had some partners. I had a big partner in Pleasanton, California,
Oh,
and
yeah.
then I merged with another group and in San Ramon, the old Diablo Funding Group. And we had a very, very big operation. We had 45 offices, a couple hundred loan officers. We had a mortgage banking operation. And then, like all lenders in the 2006, 7, 8, 9 generation, we couldn't buy a loan. And we had lots of overhead and lots of people. So I had I had left the company knowing that something was coming on. And after that, one lender just kind of crumbled after another.
Wow. Yeah.
So I semi-retired, was doing some loans on my own, consulting with some mortgage companies, doing private money. And then about 2 years ago, I said, this is what I know how to do. I was bored to death. So let me get back into the business. And the time was commercial hard money, which I call soft money because it's very easy to get. I started a new business called Soft Money Funding, SM Funding, based out of Burlingame here. And we have pools of Silicon Valley investors that buy private money deals.
Right.
And even the residential, because we can't do owner occupied transactions. The compliance, the disclosure on owner occupied stuff, especially with private money, is just too difficult and there's too much liability. So
Yeah.
everything that we do now on the hard money side is considered a commercial deal, non-owner occupied houses, rental units, bigger rental units, and some shopping centers, office buildings right now we haven't seen a lot of.
And no, only if you want to buy them for a very low price.
Right.
Yeah, there's some interesting transactions going on out there. So someplace in the middle of all that, you got an insurance brokerage license?
Yeah, well, that's was one of the things that happened is, when the mortgage business crashed, a very, very good friend of mine was running a successful private commercial insurance practice down in Redwood City. And basically, I said to him, he knew my situation, he knew my family, he's best friends with us. And I said, I got to find something to do because I had a couple of kids. I was a single, full-time, full custody dad. I said, I got to find something to do to make some money. And he gladly kind of showed me the ropes because he knew he had seen what we had made out of nothing in the mortgage business. So he was kind of excited to have me come on board. And I know enough about commercial real estate, financial situations to be dangerous. And what I found is a lot of commercial insurance brokers, they're kind of done. They have a client base, they have so many people, and what organically comes in, they really don't go out and work for it anymore.
Right.
And he had specialized in habitational office buildings, and different types of commercial businesses. And so for me, that was an um, easy thing to call on and get people.
Right.
And the mechanics are exactly the same. There's insurance companies out there that only work through brokers. and
Right, right.
you submit an application to them. They look at the risk and they quote it, and in some cases there's very, very few insurance companies that do it. So that was a lot of your client's only option. So that worked out good for a few years. He sold the business. We agreed, go our own ways, and I took some time off.
Yeah.
My kids were grown up now.
Oh, nice, nice. So you're back in the mortgage business or the hard money business, the soft money business?
Yeah, I'm actually in both. Okay, so my SM funding company funds all of our private deals. And we just started a new company because of technology. I have a company called geniusloans.ai. And basically, I paired up with the largest lender in the country. And with our technology and their technology, I think once again, we've made the loan process just a little bit easier and a very, very smooth, hyperspeed, type of a process. Because I mean, literally, you can go online. If you authorize your paycheck stubs and your bank statements and your W-2s and all that, because you can do it all online. You authorize credit, it automatically runs through that automated approval system I was telling you about. I was on
Okay.
years ago,
Yeah.
and it issues an approval really within an hour. So
Wow.
if you're approved, you know what you need. It may waive the appraisal if it's a refi. If you're waiting on an appraisal, now you can invest the money with some confidence that you're going to be approved. And essentially, when the appraisal walks in the door, the lender is so good at the disclosures, 7 to 10 days, 7 to 12 working days, you can close a loan comfortably now compared to the old 45, 50. And something's always going wrong, remember?
Oh, yeah. Yeah.
Always something going wrong at the last minute.
Oh, we need more information. Oh, you didn't tell us this. Oh, we need this little thing. Yeah, just drive you crazy. So that's great. So tell me what you think the current market is and where the future is going to lead to.
Oh, I'm a believer that because I've been through a lot of these,
Yeah, right, right.
okay? And I really think, given the overall economy, whatever you may think, the only thing that's going to kickstart this economy into like moving forward, like pulling the truck out of the ditch,
Yeah.
is the housing market.
Ah,
And they need to do two things in the housing market. One, lower interest rates,
yeah,
okay, make
right,
it affordable for people to buy, maybe some new programs for purchasing. And secondly, the refinance business. They need to get right now, from what I understand, there's about $1.5 trillion in consumer debt. Out of that $1.5 trillion in consumer debt, about 80% of that's held by people who are actually homeowners.
Oh, wow.
So homeowners have to have a way. Most people do not have a windfall of income, right? You don't have stock options. You don't have a
Right.
great big commission coming in. You don't have a capital gains on something that you can pay everything off with. So in order for people to get out of this load, whether it's credit card debt, student loan debt, wedding for your daughter debt, whatever it may be, they're going to have to be able to refinance at a low enough rate to have it make sense and pay everything off. And I believe that, there's going to be a great reset in the mortgage business again. So I believe there's a mortgage refinance boom somewhere in the near future, maybe the fourth quarter of this year, first quarter of next year. I just think when all the pieces are in place, it's going to go.
Yeah. Well, so what's the corner, sort of the going rate for a loan right now?
Okay, so if you're getting a conforming loan, Fannie Mae, Freddie Mac conforming loan, in our area, like less than, let's say, $850,000, you can still get the high fives.
Oh, okay.
Okay.
All
If
right.
you want cash out, it's gonna be a little bit more. But when you start bumping into the jumbo loans, you get into the 1.2 million, 1.3 million, high balance Fannie Mae, you're about 6 3/8. You get into the super jumbo loans, you're probably super jumbo loans by what they call private investors, because Fannie Mae, Freddie Mac has limits, right, that they'll go
Right,
to.
right.
So if you have to go, the jumbo lenders are out there, they're still looking for the high sixes.
Yeah, okay.
But I think when all of that starts to go sub five, it's gonna blow up.
Everything's going to turn around. Yeah.
And how
Well,
they do, yeah.
so are you saying hard money's what's hard money running at? Is that in
So
the high?
hard money. So the good thing about us being in California, because I do about 90% of our business in California.
Yeah.
California private money, I mean, private money investors still love California.
Oh,
Okay. If you have a 55, or less LTV single family residence, that's let's say a commercial, use it as a rental. need some cash out, I can still get you somewhere between 7.25 and 8.99. And for
Wow.
private money, that's pretty darn good.
Yeah,
I can go as low as, a couple points,
uh-huh.
so it's affordable.
Right. And how long a term are those?
24 to 36 months.
Yeah. And
And we
then you
don't
got
do interest all we don't do interest only, but we do a 40-year amortization, on the repayment of that.
right 40 year. Wow. Not even 30, 40. That's pretty good. So so those must be fairly popular, I would think.
Very popular. Very popular. Um, the good and bad about California is that a lot of people just don't need the money, and then some people need it desperately. So, the greater Bay Area,
Yeah.
we do a lot of our lending, North Bay, Central Valley, even, Eastern, Southern California, some of the places where I want to say that a lot of your investors, people or people getting into something for the first time, they buy something, they got to get into it, then they got to remodel it, then they sell it and get out of it.
Right.
So
They're
we don't do fix and flips because we're
uh,
just not in that market. We don't want to have to manage the money that tightly. But, somebody who has to get into something just because maybe they found a deal or they inherited the property, the roof's falling in, they got to do something fast, they don't want to qualify. They do the capital improvement, they get the acquisition, and then they can start looking for money to pay off the private money loan.
right. Right. Well, it sounds like typically some of these people are not all that high risk.
Oh, some of the people are very high risk, right?
Okay. All
But
right.
but the pain of not paying and what they can lose, okay, puts them in a position where they understand that paying that mortgage is a very, very, very um, important thing to do. It isn't,
Right. Right.
it's like you pay the mortgage, you don't pay the phone bill, not the other way around. Um,
Yeah.
but again, a lot of people, again, but some people manage the private money very well. They don't need the money. Like I said, they're not high risk people. It's just another deal they have going in the background, and they calculate the cost of the finance into the deal,
Right. Right.
right? And the deal is so good on the exit that paying 2 or 3 points up front and paying 8 to 10%, during that 24-month period is really small potatoes.
Are you
And
doing
then
any business loans?
no business loans.
No business loans.
If the
You work
business, but if they own the property, if they
yeah,
own the real
okay.
estate, we can loan the
But
real
you gotta
estate.
have collateral.
Right. But I'm not making loans on P&Ls or times in business.
So what sort of percentage rate are going back to the lenders?
Back to, I mean, going
The
like, for example, they walk back
foreclosed,
into Wells Fargo,
well, yeah, foreclosed on, or even the hard money people. How many of those loans go sour?
you'd be surprised. Some, I mean, 20 to 33% on a regular basis. Now, I don't know if they go back to the lender, but there's some type of notice
Recourse.
of default or foreclosure process started.
Yeah. Okay. And they usually figure something out.
Yeah, most people don't lose it, but something happens. Something, an event happens to take care of the indebtedness.
Yeah. So they get a workout or whatever. They sell the property. They do something to
Right.
get back.
Right.
So
And even us as private money lenders, if we end up with the property and we sell it, we essentially take our money and fees, and what's accumulated, and then we return the difference. So we don't capitalize on their bad fortune. I mean, we've had foreclosures where we've written checks back for $400,000 to people that have been foreclosed on, and the process took its toll.
that's interesting. So wow. So in some ways, I'm sure people come to you just because of that particular situation, that you're not kind of taking the whole thing.
Right. Well, I think I think it's just a prudent thing to do because I think the law is vague enough that if somebody loses their entire equity and you put it in the pocket, it wouldn't take a billboard lawyer very long to come after you and find something to tie you up with, right? And
Right, right.
the minute they put a lis pendens on the property, you know,
Not worth the litigation to go through that.
everything starts from scratch again, right?
Yeah, yeah. Why not? So, well, so if I want to loan, or if our listeners want to loan, how do they get a hold of you?
Well, you can call me directly
Okay.
at 415
Yeah.
757 7797,
Cool. All right. Or they can send you an email at the address on the screen.
Send me the email address on the screen, or if you want, you can just go to ericwassmann.com. And that's a website that I pick up in um, both the soft money funding and the Genius loans. Come through. I get posted there.
Cool. Well, let's keep in touch. I think we have some transactions we can do here.
All right, I look forward to it. And like I said, anybody, if you need help with anything, you let me know too.
Absolutely.
You tell me what you do, and I can help you. Because again, I talk to a lot of people like you do.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.